So, economic uncertainty doesn't stop opportunities. It actually changes how smart businesses approach them. Whether markets are tightening or interest rates are, fluctuating, successful companies don't pause growth. Instead, they just adjust how they use capital. In 2025, the difference between surviving and thriving often comes down to how strategically a business deploys funding. Understanding uncertainty is the first step. And, uncertainty doesn't always mean recession. It can include things like rising interest rates, tighter bank approval standards, slower consumer spending, and increased operational costs. Rather than waiting for, perfect conditions, strong businesses plan ahead by securing access to capital before cash becomes scarce. Here's the thing: capital gives businesses options. During uncertain times, options really do mean power. Smart business owners use funding to maintain healthy cash flow, secure inventory at better pricing, expand while competitors slow down, renegotiate or restructure high-interest debt, and invest in marketing when advertising costs are lower. Having capital available, even if it's unused, creates stability and negotiating leverage. So there's this real shift happening from growth at all costs to, more strategic growth. The most successful businesses in uncertain markets, they focus on efficient expansion, not just reckless growth. For example, they might buy cash flow positive assets instead of going for speculative investments. Or they expand into essential service sectors. Investing in automation to reduce long-term costs is a smart move too. And, honestly, strengthening supply chains rather than overscaling teams just makes sense. In this environment, funding becomes a tool for optimization, not just expansion. Flexible financing really wins in volatile markets. One major mistake businesses make is relying solely on one financing source. When banks tighten lending, businesses without alternatives can, stall out. Flexible capital options allow businesses to pivot quickly as conditions change, take advantage of short-term opportunities, and avoid distress refinancing. The goal here isn't borrowing more, it's borrowing smarter. Prepared businesses move first. History shows that businesses that prepare during uncertain times often dominate when conditions improve. While others wait, smart companies acquire assets at better valuations, lock in funding before demand spikes, and strengthen their market position. Capital, when it's used properly, becomes a competitive weapon. Just a few final thoughts. Economic uncertainty doesn't eliminate opportunity. It really just filters out unprepared players. Businesses that succeed in 2025 will be those that plan ahead, maintain access to capital, use funding strategically, not emotionally, and focus on long-term sustainability. In unpredictable markets, access to funding isn't just financial support, it's a strategic advantage.